Hey guys, it is Greg again. Wanted to there's a follower of mine had a question about like trying to get in on the on these coins when you want to do it. And I'm going to use just as an example, since it's easy to illustrate on this chart. Okay. I'm going to use Sol Phantasma as an illustration. So here's my here's Sol Phantasma. Okay, right here. This is a coin. Let's say this is a coin that you like. You know, you can do this with any coin. It's corrected almost down to 90%. It might hit, Sol Phantasma might hit 18%. Now, going into coins, obviously, if you're going to pick up Sol Phantasma, if Bitcoin is dumping, you don't buy Sol Phantasma. If Ethereum is going down, you don't buy Sol Phantasma. If those coins are going down, pretty much you don't buy any other cryptocurrency unless there's something specific going on. Now, there's some coins usually that can, I would kind of say that they're like community coins, or it's a newer coin maybe, and that it has a bunch of people flooding into it and it can take off. More than anything, that's just luck. That's just luck. You got into a coin and it made a run. That's luck. Or insider information, where people got information about the coin and they had a plan to pump it. There's no really other way, unless you have insider information type deal, or you get some information from somebody else, say this coin, we're doing this, it could pump. So that's one of the things that you have to realize, even though I'm using this as an example. So we know this here, we have a 5-wave impulse up. Okay, I'm going to use this coin. You see the highest peak on the RSI, that's the 3rd wave. So it came up and did a 5th wave right there. You can see it 1, 2, 3, 4, 5, right? And it's coming down to do its correction. Now, users asking, well, Greg, where would you buy the coin? I tell you right now, you don't buy it now. You don't buy this coin now if you want to go long in this coin, okay? So what you're going to look for, wherever the bottom is on this coin. Now, there's different styles of trading. There's some that will have a their buy zone. So let's say it's like this. There's some that will do that and it's in their buy zone, and then they'll have a stop loss at the bottom of their buy zone. I don't like doing that. I like to see confirmation off the bottom. And what you're going to see is you're going to see a bullish move off the bottom, and it's going to go up into a wave. This could be even too big actually right now for a coin like this. And then it is going to retrace, okay? And you're going to see a bullish move off the bottom, just like that. And you want to make sure it doesn't break that level right there. So let's say you entered in, or you haven't entered in yet, and it goes up from 17 cents up to 39 cents, right? Just watch it go up, okay? And then it's going to do a correction back down to, say, 21 cents. You can enter in this area, okay? And then if it goes back below what is that? 19 cents, 18 cents, then you just exit out. It's gone bearish. It's a very simple process to use. So if this is supposed to be the 1, 2, if the two goes down there below that line, it's bearish. Okay. So it's the same principle as higher highs and lower lows. That's why people look for higher highs and lower lows, is because it's a bullish count. So here's the count, right? Here's a higher low, higher high, higher high, higher low, higher high. And then if it corrects down here like this, that's why people look for these higher highs and higher lows. They're looking for the Elliott waves is what they're really looking for. Here's a higher, here's a low, and here's a higher low. So this whole movement, and then if it does another one, would be bullish. And this is what you're doing on a smaller scale down here with this move. You want to see a bullish move and pick it up on a correction and your stop loss there. So this is an example. You could get in at, well, you don't want to get in. You want to move it up and then see the correction. It's going to do a correction, okay? And then you are going to say enter in at 28 cents. And then down here, if it busts past the 18 cents, you just get out. Okay. And obviously you don't dump your whole bag, all of your money into this spot. You have to have a plan how much is it going to be, what percentage of your portfolio is this coin, etc. And then if it does continue on the bullish move, then you have a plan beyond that to enter in on more corrections to get in on the movement of the coin if it's continuing to go bullish. But any second it goes bearish like this, it breaks that line, that's a bearish count. So it wouldn't be a higher, you could call this a higher high. Now it's a lower low instead of a higher low, and you get out. Okay. So what happens with a lot of guys is that they get into this position and they get down here again and they get stuck. Okay. Now you're in no man's land. This is no good because you're just hoping it'll come back up, and it could, but that's not a good strategy. It's not a good strategy. It's the best strategy in this market is get in, have a plan. What's your exit? What's your entry? What's your stop loss? Where are you going to exit? Okay. So in this scenario, you watch this move. It does this move just like that. It goes from, let me put it just like that. Let's say the bottom is right there and it goes off like that up to 40 cents. Okay. 23 to 40 cents. And it's going to do a correction. You see that, and you have your plan. You go, okay, I'm going to pick it up for 29 cents. And if it breaks 23 cents, I'm out. That's it. That's your plan. That is your plan to just say, hey, it didn't work. I'm out. Okay. And if it stays there and it continues to go up, now you have to have a take profit plan. Now you have to have a take profit plan because various things can happen here. It can go up in this move, right? Like that. That's a 5-wave impulse. But if you're not looking at your charts and studying your charts, it could be an ABC up on a correction. Okay. I don't want to go into depths of the corrections, the difference between the corrections and the impulses. But the corrections up get people caught up a lot too. So, but more than likely on a coin like this is why I like setups where they're very clean. It's a 5-wave up, it's doing a second wave, and then it's going into a third wave. These other coins that you go look at, some of the other ones, they're hard to determine if is it going into a bullish move. You have to really be a lot more careful with it. So that's why I like clean charts that look good. And then the next move likely is a bullish move. The higher probability is a bullish move. But that's what you want to do. You just have to have a plan all along the way. And if it is a bullish move, out of there, say this is a 1-2, it's going to go up for a 3 and then correct in a 4 and back up for a 5. You have to have a plan. Are you taking profits through here, or are you going to ride it again? Because it's going to do another correction like this, all the way back down here where you entered here previously and then back up. So that's the whole thing with any of these markets, especially cryptocurrencies, because they correct so deep like this. They correct so deep, usually. Sometimes they don't. If they're bullish coins, sometimes they have a shallow correction. You just don't know. That's the risk that you take. But here's on a larger scale. If you want to play it safer, you go up here. This coin's going to go from 22 cents. Let's say that's a little bit too big for a coin like that. It's a massive move. Up to, let's say $1. Let's say $1, right? And you're over here. Here's a correction. You're seeing it come down. It made a nice move, and you pick it up in this area, and then you ride it up on there too. And this is a good area. There's lots of guys that trade third waves. This would be a wave 1, correction on a wave 2, up on a third wave, because the third waves typically have a higher probability of being the longest waves. And that's where you're going to make most of your gains. Okay. All right. So on that part, now on the exit. So let's go over here. I hope that clears things up, what you want to do. I know I went over it kind of quick, but that's the basis of it. Okay. Putting it together with the waves, a 5-wave, 3 down, you pick it up there, stop loss, get your profits. And I recommend in the crypto market, you want to aggressively take your profits. Just come up with your strategy, take your profits and get out. Don't worry about, I'm going to miss something or what have you, because at the end of the day, as you can see what happened with Luna, all those gains can disappear real quick. So here's a 5-wave impulse. So let's say you're over here, you got into this. You were happy, you planned it out, and you got into this move right here. So now the question is, where are you going to exit out? So it's moving along. Okay, you have to know your RSI and your divergences. Okay, so right here, you see that peak of that third wave? There's the peak. It went up a high in that peak. Once you see the divergence like that, once you see the divergence, especially on this scale, you can see this went from 20 July to 02 December. So 6 months. So this is a fairly large scale. It's on the 8-hour chart. Once you see that divergence, it's best just to get out or take a significant amount of profits. Me, more than likely, I would take almost all of it, if not all of it, and just get out. Okay. It's better in this market, the cryptocurrency market, to be safe than sorry. Because if you say, oh, maybe there's just one more, and there could be one more little push, right? But you're wrong, and it just starts, going back like this. That's not a strategy. Just have your strategy. Say, okay, there's my plan. Third wave peak, there's highest on the RSI. It went up, boom, and then you look for that divergence, and then and then you exit out. I hope that answers questions for you. And I made it simple for you to do that, but that's kind of what you do. If you're not comfortable with it, do it on a small scale. Get whatever amount you want, $50, $20, $50, $100, and get on there and practice it on a small scale on wherever you want to do whatever exchange, and do it, and just practice it like that, or do some paper trading without any funds. If you go over to KuCoin, they'll give you $20 of free trading money. I think it's something like that. I think it's $20, and you can do it over there. If you're going to I don't want to say depend. If you're going to be in the cryptocurrency market to make a lot of money, then you should be into the charts. You should be practicing your trading. You should know the divergences. You should know the these basic fundamentals of TA. If you're not, you're just going blind, and that's dangerous, as everybody who's watching this video probably knows. Thanks for watching. Peace.